Hi everyone, welcome back to Corporate Decoder, the place where we decode the language of big business and leave you knowing more than a C-suite executive. Today we're diving into a filing from a tech giant that's all about customer relationships. Get ready as we break down their latest moves and what it means for their billions. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we discuss these filings in real time. So what we have here is a filing called a Form 8K, which is basically a company's way of telling the public about major events happening right now. Think of it as a news flash from the corporate world. This particular report from Salesforce Inc. came out on September 3rd, 2025 and is packed with some pretty interesting updates. Salesforce is a company that makes software to help other companies manage their customers and sales. They're a huge player in this space, and what they do often signals big trends in how businesses operate. The first big piece of news is about their financial results. On September 3rd, the same day this report was filed, Salesforce put out a press release announcing how they did in their fiscal quarter that ended on July 31st, 2025. Now, often these press releases are mostly good news and PR fluff, but this 8K officially incorporates that information, meaning it's part of their public record. And we need to pay attention to it. While the actual numbers from that report aren't directly detailed in this specific 8K, we know they're talking about their performance for that quarter. This is important because it gives us a snapshot of the company's health and how well they're performing compared to what people expect. Beyond the financial results, there's another major announcement here. Salesforce has a program where they buy back their own company stock called the Share Repurchase Program. This program has been going on since August 2022, and it doesn't have a set end date, nor does it force them to buy a certain amount of stock. What's new and significant is that as of July 31st, 2025, they still had about $5.7 billion available to Fast 2025. They still had about $5.7 billion available to buy back shares. Now, on September 3rd, they decided to boost this program by another $20 billion, available to $5.7 billion available first to Fithio 25. They still had about $5.7 billion available to buy back shares. Now, on September 3rd, they decided to boost this program by another $20 billion. That's a massive amount of money they're committing to buying back their own stock. Why do companies do this? Well, when a company buys back its own stock, it reduces the number of shares available in the market. This can make the remaining shares more valuable because earnings per share go up. It's often seen as a signal that the company's management believes the stock is undervalued. Essentially, they're betting on themselves. This $20 billion increase is a really strong signal from Salesforce that they feel confident in their future and the value of their stock. They can do this through different methods like buying on the open market or through private deals, and they do it when they think it's the right time and price. This filing also points us to the actual press release which contains those quarterly results we mentioned earlier. It's attached as Exhibit 99.1. Think of this 8K as the official stamp that says this important news happened on this date, and the press release is where you'd find the nitty-gritty details of what those results actually were. This is standard practice for these reports to reference and include associated documents. And finally, we see the signature of Sandeep Reddy, who is the Executive Vice President and Chief Accounting Officer for Salesforce. This confirms that the company has officially acknowledged and submitted this report. It's like the chief accountant saying, yes, this is all accurate and we're reporting it. They are the principal accounting officer, signifying their ultimate responsibility for the company's financial reporting. Now let's look at the bigger picture and what this filing tells us. The huge increase in the share repurchase program to the tune of $20 billion is a massive vote of confidence from Salesforce's leadership. It suggests they believe their stock is a great investment and that they have plenty of cash flow. To support such a large buyback, this can be very attractive to investors as it potentially increases the value of their existing shares. However, we also need to remember that this money could have been used for other things, like research and development or acquisitions. By choosing to buy back stock, they're prioritizing returning value directly to shareholders through share price appreciation rather than investing heavily in future growth initiatives or expanding their business through other means. This strategy can be very effective in mature companies, but might signal a slower growth phase compared to investing profits back into the business. It's a strong signal of immediate value distribution, but could potentially limit aggressive expansion or innovation in the very short term. This is a classic balancing act that every major corporation faces. We'll be digging into the actual financial numbers. Alright, that's our quick look at this Salesforce 8K filing. What's your take on this massive share buyback? Does it signal strength or a lack of new growth opportunities? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description to join the conversation. Thanks for watching. See you next time.